Carla, today we expect the official word on major changes to the nation's regulatory regime. For more, we're going to go down to Washington and Bloomberg's Peter Cook. Peter?
Well, Eric, the president's going to speak here at the White House about 12:50 Eastern Time, roll out what some are calling the most sweeping regulatory changes for the financial sector since the Great Depression. Will Republicans in Congress be on board? We're going to put that question now to the number 2 Republican in the House of Representatives, Virginia Congressman Eric Cantor, the minority whip. Congressman Cantor, thank you for the time this morning. Appreciate you joining us here on Bloomberg.
Peter, it's good to be with you.
Are you on board, sir? You've heard undoubtedly by now some of the details of this plan. Is this something you can support?
Well, Peter, we've got to all take a look at it and see exactly what's in the plan. And it's important to remember, I think, 2 focus issues that we need to really be concerned with. One is the Main Street investor out there, the working families who have seen the evaporation of so much of their life savings. And frankly, from their perspective, it seems that we've got to do something to end the constant bailout culture that seems to continue here in Washington. And we got to see some a regulatory fix to address the problem that these working families and investors see has gone on. I mean, they feel they haven't gotten a fair shot on Wall Street in terms of their investment. So that's number 1. Number 2, we've got to look to the small businesses of this country that are the economic engines, that are going to be the ones that bring this economy back. And we've got to respond to that, to their needs, which is what is wrong with the credit markets here? Why is it that I continue to hear from the small businesses that I represent in Virginia that they don't have their credit lines again? They can't grow their business if we don't do something to try and address that situation.
Congressman, let me address your first point there. The Obama administration, the president himself telling us in an interview yesterday, he's filling in the regulatory gaps here. He's imposing new systemic risk oversight. Those institutions deemed too big to fail are going to face new scrutiny from the federal government to the point that they won't cause that kind of burden on taxpayers in the future. Is that something that you think makes sense right now, particularly giving the Fed that role to oversee systemic risk?
Well, Peter, first of all, I think the overall goal is certainly one that no one would have much disagreement with. We want to try and reduce or at least provide transparency to systemic risk. But the way that it seems the administration is moving is we're going to add yet more powers to the Federal Reserve, which is already tasked with watching after inflation and protecting the value of our currency and pursuing a course of full employment. We're going to now add to its portfolio yet even more regulatory authority without really providing any certainty as to what type of bailouts, what type of exposure the taxpayers can expect. This is the problem. We are continuing this culture of unlimited or infinite bailouts that we've got to stop. So instead of trying to go in and add yet another layer and more powers to the existing regime, I think what people in this country are looking for is some certainty so that we can address really what went wrong. Why should we necessarily be empowering the regulators who presided over the mess that we got into to begin with? And that's why we're going to look very closely, Peter, at trying to streamline rather than add to this patchwork of regulation that's caused a lot of the uncertainty and masked the kind of risk that's out there for investors.
Congressman, just a couple seconds left. Your take, does this get done this year, given health care and climate change, all the other issues on Congress's agenda?
I think, Peter, you and I have always said when we've spoken that the economy is the most important issue. Credit utility is imperative for us to get this economy back on track and for us to create jobs. Government cannot do that. Government at best only redistributes the wealth. We've got to focus on creating wealth again, which is about bringing entrepreneurialism back and fostering an environment for job growth and capitalist and risk-based investment.
All right, Congressman Eric Cantor, he's the number 2 Republican in the House of Representatives. Thanks for the time. Appreciate it. Eric and Deirdre, we're going to get a perspective from the White House. Economic advisor Christina Romer will be with us shortly.